10 years ago or thereabouts, when the market melted down, it was the leadership of the market that was in question. I remember the market memorandum just before the bull in the China shop report from Proshare. So, talk us back through that. Do you think we've been able to address some of these rules and regulation and leadership issues at the marketplace over the past decade?
Well, to start with, Omatola is precisely correct. It wasn't a golden age. It was a situation in which I felt that was a period in which you had a combination of regulatory inertia, malfeasance, and basically everybody just throwing all caution to the wind. And it was a period of financial exuberance. And as such, we naturally fell to the bubble, which were all jointly created by every one of us. And as you can see, we're not the only ones anyway. And globally, you will see that in terms of activities generally, everybody seems to have recovered, but not entirely to pre-crisis peak levels, especially for us in Nigeria here, where we haven't gotten to. So what is it that we have done? What are the lessons we have learned from all this is that the same situation where we got into, whereby regulation is not tackling tomorrow's trends, but focused on today's headlines, is still the norm. And as such, you haven't significantly seen any shift in the understanding of how capital formation takes place in the macroeconomy is such that we can bring into our market. The capital market, quote unquote, in a plural sense, has expanded, especially with what is happening with the FMDQ market. But the equities market has basically not significantly changed much. If at all anything, its loss is to retail fervor. A retail market which was not significantly there before. It was just a blip, but it was never really grown. And as such, we have a situation whereby what we ought to have taken from that financial crisis was the opportunity to put regulations, laws, and rules in place that allow for the new market, which we see operating currently, to emerge, i.e. things like crowdfunding, the development of collective investment schemes in such a way that they recognize risk as well, the development of things like the private equity sector, which has a better role in capital formation, and venture capitalists as well. And as such, you begin to see the fixation on looking for public offers, IPOs from companies. Whereas if you look at the macroeconomy, which is predominantly service, you haven't found new companies, which, if you look at the macroeconomic framework, the GDP, as you may find, you find that you have growth in telecoms, you have growth in the arts and creative industry. But those are not sectors in which we've been able to find a way to create a financial model for which we can bring into the capital market. So we have learned a few lessons in the sense that the Nigerian Stock Exchange has similarly understood the place of data. We have developed a more robust market analysis system that is not focused on the buy side only. There's also the sell side market. We've also developed instruments which basically help to deepen the market. But we're a far cry from being able to say that we have actually made any quantum leap from the challenge we've had. We still have corporate governance issues, maybe not at the scale at which we had it then, but at a much more sophisticated scale right now. And for me, I think that the major challenge is having to understand that we should create the nexus between the macroeconomy with the markets by readjusting the body of laws that seem to hold us down. You see developments in Kenya, in South Africa, from the Securities and Exchange Commission, from the stock exchanges, in terms of fintech, in terms of listing new tech companies, and we haven't been able to put ourselves in a position where we are able to do that.
You're speaking, to macro economy making the markets. In the last 10 years, or even before, when the market momentum was there, do you think we have a macro economy that supports the broad streets, broadly speaking, whether it's the fixed income side or mutual funds, as you talk about it, or PE, to create new economy, let the market absorb these ones and bring them in for listing or diversifying investors' portfolio and interest and money making?
Okay. No, it's not as complicated as that. The simple fact is this: if you look at the structure of the Nigerian economy, we basically have a balance sheet that focuses more on trade and exports, the more volatile side of it, generating FX, cash flows, financial services system that is structured around mostly governments and corporates. That you do not have mobilization of cash from the retail end because you have a poor insurance, pensions market, all this while. So the markets really reflect capital formation. We've tried, in as much as we want to diversify the revenue sources of government, but we also need to diversify the economic structure to move towards capital flows, i.e. foreign direct investment flows, remittances, and basically the retail end of it, which is insurances, pensions, and what have you. It is when you have such that you have a basis for you to have expectations around your equities market. I feel that the nexus between the macroeconomy has been in some ways a limitation, but most importantly, I haven't felt we've gotten our politics right in terms of how we, at the capital market, manage conversations with the government in terms of the issues they do. Every one of us know fully well the story around Safaricom and how the markets insisted that for any listing would take place. We're hearing some positive news in terms of possible a telecom listing. It shouldn't be a function of a single telecom trying to list. It must really be about us having a very broad base plan, which I think would happen. I mean, if you take simple issues around the market demutualization issue, which seems to be a protracted issue, a matter which we haven't been able to resolve, it is until you have that kind of thing take place, then the markets start beginning to earn a position in which they want to challenge and discuss and engage with the government in terms of how they will grow the market. So the capital market has grown because basically we've grown the domestic bond market. We've grown a state government, the corporate CPs market has grown, but the equities market is almost at same levels.
Femi, you mentioned a few things. You mentioned private equity, venture capital. Do you think we should be getting ready from the regulatory side of things for cryptocurrencies, Bitcoin, startups, what have you, to have a brand new set of investors who are young, dynamic, and good to go? Do you think we also need to have new regulations around an incubation for some companies that are coming up? What sectors do you think we will find them and that we should grab them as quickly as possible, reinventing this market?
So here's a simple analysis. Most of the times your capital markets reflects your economy. So if you take the sectors within your GDP as you're broken down to about 36 sectors and you look at the 12 sectors in your capital market, you want to draw a nexus between those growth areas of the economy and those companies coming up. If you take a simple analysis of companies that they were top in 2008, almost 10 years ago, August 9 to date, and you look at companies that are top in the US market and the Dow Jones specifically, with a FTSE, with a CAC, with the Kenya Stock Exchange, with the Johannesburg Stock Exchange, and with the Nigerian Stock Exchange, you will find that you basically still have almost the same set of companies in the Nigerian Stock Exchange still at the top in there, which tells you that there is basically no nexus between your economy and your market, because what has happened in most of these economies is there's been a significant shift. For factor-driven economies like Nigeria, which relies on oil and on skilled labor, you will find that that situation should be expected. But if you were to compare Nigeria within the emerging economies that is comparable to itself, you will find that one of the few things they've done is that there are new businesses which align with the new market opportunities, basically in technology, within the whole value chain of technology, specifically fintech, in areas of creative arts, where you find places like India doing as well, where you find places like I think India specifically comes to mind, and Kenya tries, but it's not yet there. So the question is this. I do believe the Nigerian Stock Exchange is already thinking in some way around this area. Through the FinTech Association, I learned that there is a talk around trying to find a small group of people who can be put around the legal table, but not necessarily listed, but in such ways that they can qualify them in terms of corporate governance, in terms of structure, in terms of ability for them to be able to attract the funding they require to take them to the next level. Don't forget that Nigeria, with all the interest in technology, is still at the consuming end of the value chain. There are no leading products, there are no leading providers, there are no leading solution providers. And with all the talk around innovation, around fintech, you find generic me-too products. So there's quite a number of work to be done in that space. And we're hoping that, I'm not going to hold government accountable for this, I'll just hold ourselves responsible, that the market needs to make a better case to invest a little bit more in research and make a better case for government to show the economic value of, for example, holding us down in terms of making a decision around how we want to approach blockchain, for example.